On Bloomberg.
All right, we are moments away from the start of trading. 21 seconds to go. This is Bloomberg Open Interest. I'm Katie Greifeld. Of course, we're keeping an eye on markets on this Thursday. We have a little bit of a rally pre-market, of course, even though we got NVIDIA earnings yesterday and the outlook failed to inspire, even though we're talking about enormous numbers overall. But turns out things are all okay if you have the economy growing at a 3% annualized clip, and that's what we learned this morning. Meanwhile, you take a look at the bells right now, ringing at both the NASDAQ and the NYSE. You can see the clapping cogent on the NASDAQ there, of course, as trading officially opens in the U.S. trading day. Let's take a look at what the major averages are doing just seconds into the trade. And like I said, a rally on our hands. For now, you take a look at the S&P 500 up about 0.3%, a little bit more so if you take a look at big tech, up 0.4%, and that is very impressive, of course, with NVIDIA lower, and small caps in charge for the moment. The Russell 2000 up 0.8%. But let's get to it. NVIDIA, it's making a move lower now, down 4%. That is despite meeting and beating analyst expectations on nearly every measure. Shareholders, though, of course, are on edge as its new Blackwell processor lineup has proved more challenging to manufacture than anticipated, potentially hurting its dominance in the chip market. Again, Chanel, you take a look at shares down by more than 4%.
And Katie, I'm looking at a stock just soaring this morning, a firm higher by 23% at the open after reporting what CEO Max Levchin called a killer quarter. I quote. Levchin and analysts are now saying that the buy now, pay later company could turn a profit by 2025 as the consumer stays healthy. And speaking of the consumer, Gap reported results on their website this morning. We were expecting earnings after the bell. Comparable sales beat analyst estimates, and the company boosted its outlook for the year. You now have Gap up about 7% on the morning. Let's now take a closer look at the chip sector today, the most important sector to watch after NVIDIA, with Bloomberg's Abigail Doolittle.
Yeah, of course, Chanelli. NVIDIA down here, down 3.5%. Off the lows, though, flirting right around its 50-day moving average, so some of that near-term support trying to hang in. You can see after that quarter where they did beat, although the beat much smaller than it typically is. There was a 4% top line beat. There was a 5.5% bottom line beat, much smaller than the typical blowouts that they do. You can see the space overall, not so shabby at all. Lots of green on this screen. Now, what really had the stock down yesterday was the guide. If we take a look at where the guide is at the lows yesterday, and the aftermarket's down as much as 9%. So for the third quarter, this current quarter, they have guided to $32.5 billion in sales. The average analyst estimate below that. However, the highest analyst estimate well above, and we've been used to these blowout guides. I can still remember the one from May of last year when sales 50% better than what had been projected. I don't remember another company having such a blowout. This was not that, so a little bit of disappointment, some high expectations. Speaking of the stock and high expectations and the chips, we were taking a look at this yesterday. NVIDIA on the year still up 147%, an incredible, maybe ridiculous amount, and then the stocks up 22%. So really a lot of outperformance there. They're going to need to keep putting up big results, Katie, maybe better than they did last night.
Yeah, and that's a tall order, of course. NVIDIA shares down right now, even though those supply chain concerns for NVIDIA's next generation chips are going to be handled by the end of the year. That is according to CEO Jensen Huang. So let's take a listen now.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
We're joined now by Threadneedle Ventures founder Ann Berry. You take a look at Jensen Huang projecting confidence there. You see the market not buying it to the extent that he would like particularly, but are you buying this dip?
I'm not actually, Shanali, and the thought I've had through my mind all throughout this is no good beat goes unpunished, right? That's been my theme for the last 24 hours. I'm not buying this dip because I think that NVIDIA has been fully and fairly priced for quite a while now, and I think that's part of the market reaction we're seeing.
So where else do you look at this juncture? There's been a conversation about broadening out that AI story. You're mentioning valuation being kind of the issue here at this juncture. Is there anything that's been left out of this kind of almost AI bubble that we've seen forming in the last couple months that's worth buying now?
I think tech's been really hard to find any value in, Shonali, and I know that we've had lots of conversation around the thematic I've been focused on, which is platformization. Which are these software companies in particular that are becoming these one-stop shops for multiple product lines, particularly for small and medium-sized businesses? And so one that I've been looking at and going into actually is Workday, which has been proving out platformization, proving out margin expansion. Again, it's not cheap. But as I look at a market that I feel is a little bit frothy, I think it's fairly valued as opposed to being overly and too richly valued.
That's interesting, the valuation question, because of course it feels like almost everything is expensive if you take a look at a stock compared to its relative history in this run-up. But at this point, how are you judging valuation? Are you comparing a stock to its own history or to relative the rest of the market?
Always. I mean, that's just such a fundamental question. Always, for me, it's about relative to its own history, relative to its own cash flow profile, relative to its own revenue and earnings outlooks. I think the issue with all this relative benchmarking compared to the peer groups, I mean, that is definitionally how bubbles get created. And I think particularly in this moment when the promise of rate cuts has been on the horizon and now we know it's coming, I think it's even more important that people stop looking at the macro and start saying, okay, let's look at the fundamental profiles of these businesses.
So stop looking at the macro. That's something that's definitely hard to do. But I want to take that valuation analysis to NVIDIA because especially the bulls like to say that it's not expensive if you take a look to its historical levels, but it feels like a hard pill to swallow when you think about just this magnificent run-up that we've seen. How do you apply that analysis to a company such as NVIDIA at this point?
Yeah, I think the danger of looking at NVIDIA's valuation relative to its history is we need to look at the context of that history. NVIDIA's recent historical context has been the massive head start it's had in the chip development relative to some of the hyperscaler customers who are now developing their own. And over time, I think, Katie, that gap closes at the head start that NVIDIA has today, and I think still has in the immediate term. As that begins to go away, NVIDIA's history becomes less relevant, and it's about what's its current and future landscape. And I think it is going to get choppier, and as a result, NVIDIA is going to start looking more expensive again.
You've been asking this question, Katie, about AI hardware versus software. I just have a broader software question here because Salesforce has been on the rise this morning after the profit outlook really because of the cost curves here. You mentioned Workday. You like Workday. Do you like Salesforce as well? And what else in the software sector?
Yeah, I really liked Salesforce as well, and I've liked things, you and I talked about Palo Alto Networks in the past. The reason I've liked those has been less about the AI story. It's been less about the promise of generative AI. It's been somewhat skewed towards productivity enhancements. That's partly been AI driven, but not as the hype would suggest. For me, the fundamental story there again is this one-stop solution. It's going to businesses that don't want multiple vendors. That being said, I did spot a story yesterday about Klarna severing its Salesforce and Workday ties potentially and going and doing more in-house, which I thought was a really interesting data point floating out there and frankly a little bit worrying.
Yeah, I mean, when it comes to that Workday call that you had, I mean, how in the weeds are you following the day-to-day news flow? Because I'm sure many people who are in the stock missed that Klarna story.
Yeah, you have to be in the weeds, I think. Otherwise, you're just sort of looking at the same old stuff that everyone else is. Workday and Salesforce are fascinating to me because when you look at small and medium-sized businesses in particular, and I work with a number of them, and you look at the installed base of software they're using, it's pretty prehistoric. And that's where I see the opportunity for the likes of Salesforces and the Workdays. When you get to these supersized enterprises, on the other hand, like the Klarnas of the world, I do take a little pause and say, well, how much can internal software development, how much can internal use of data actually start displacing some of these service providers? And I think the jury's out there yet. It was an interesting nugget. It made me pause.
Well, what do you think is causing it? Klarna being one company, but how many companies do you think might go the same direction? You have this strict focus on cost in this environment. Is it cheaper to do things at home or to go to somebody else to do it?
I think Klarna's an exception. I think that's a very finite and relatively small set, which are these supersized either fintech or pure play technology companies. Shonali, I think if you look at the dispersion of the size of businesses outside of that sort of mega enterprise, there's plenty of white space for the likes of the Salesforces and the Workdays. But it was an interesting data point for me. To me, it was more Klarna, which is rumored to be gearing up to go public, is under enormous pressure to show how the promise of AI is going to translate into real numbers. And I think that's where they're trying to scramble to find examples.
Would you buy into a Klarna IPO?
I would not right now.
Fascinating.
And Barry, you're sticking with us. Don't go anywhere. Coming up, Kohl's getting a sell rating from JP Morgan on concerns that the retailer's core business is eroding. Details next in our top calls. This is Bloomberg.
This is Bloomberg Open Interest. A quick check on stocks because you have the market now just shaking off any downturn in NVIDIA shares. S&P 500 up about 0.3%, holding on to those gains. And the NASDAQ 100 flying higher, 0.7%. Again, impressive despite the drop in NVIDIA. Russell 2000 now up only 0.5%. The race is on, Katie. Let's keep an eye on those small caps this week.
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Barclays says that it's time to buy Foot Locker. The firm raising its recommendation to overweight, increasing its price target as well. And remember that Foot Locker reported earnings and sales that topped estimates yesterday. The company also announcing it will relocate its headquarters from New York City to Florida to save on costs. Next up, Jefferies says that Topgolf is no longer a buy, downgrading the stock to a hold and shaving its price target by $28. The analysts say that they are becoming more unsure about the company's prospects, especially when it comes to its debt levels. And finally, JP Morgan is cutting its recommendation on Kohl's to a sell, also cutting its price target as well. The firm says that the retailer's core apparel and footwear business is eroding. Shonali.
And we're back now with Threadneedle Ventures founder Ann Berry. Now picking up here on the consumer sector because you see so much divergence and you have to love it because divergence makes a market, doesn't it? It's finally a stock picker's market. This morning, Gap reported you had shares riding higher even though the report came out a little early, surprised investors. You have Best Buy even going higher as well. But those weaker stores are really tilted towards the lower end consumer. That narrative has been playing out. What are you buying in consumer in this market?
Well, I do think that the specialty play that we've seen recently is a really interesting place to go hunting. And I love, Shonali, even just now, like Kohl's being cut because core footwear's hurting. Foot Locker now getting a buy rating, right? So you've got that sort of generic, sort of general merchandiser, which is the cause really suffering. You've got the specialists like a Foot Locker doing really well. I think some of the retailers, two kinds of retailers have been doing particularly well. One is this kind of play on nostalgia, and we've seen that with Abercrombie and Fitch, which kind of blew my mind, this sort of turnaround. I remember that when that brand was like persona non grata.
I wore it this morning, I'll be honest.
And they've done a great job of refreshing their merchandising, and they've done a great job of reinvigorating their story, which at one point was really toxic. But there's sort of nostalgia for brands like that. That's a play to me into doubling down on experiential. And you and I, Katie, talked about Ulta before. Is it that beauty is a great category? It's pretty resilient. It's struggled a little bit over the last year, but as a category, it's done pretty well. But I think the reason Ulta stands to win and why Warren Buffett thinks Ulta stands to win is it is the definition of the experiential retailer. You go in to test, you go in to try, you go in to experiment, you go in with a community of friends. Those kinds of retailers would be on my buy list, Shonali.
And it's funny, of course, Alex Steele has a phrase, invest in your face, and I think about it every time.
She spends like an hour on face care every day.
It's important. She looks great.
She looks great.
Ulta reports after the bell today, so that will be fun to watch. But I'm glad that you highlighted Abercrombie and Fitch. Of course, we spoke to CEO Fran Horowitz yesterday, and there's so many apparel companies, it feels like, that are trying to execute their own turnaround. How do they make their companies cool again? And to that point, I'm curious about how much attention you're paying to the C-suite right now. It feels like we've seen a lot of executive turnover this year. Victoria's Secret, of course, has a new CEO coming in. I mean, how much does management matter specifically in this environment?
It matters. Numbers 1, 2, and 3. I think if you think about what you can control and what you can't control. You can't control the macro. You can't really control what the consumer's going to do in retail. You can control your own bench. And I think to your point, when the CFO of Apple departs, right, that's real news. There are certain companies, Katie, where I thought had huge potential, but I thought just the management team couldn't cut it. PayPal is one I've talked about on this show, where I thought that is a company that has such great potential, but just could never get the C-suite together that was able to go execute. So I think given execution's everything, who's sitting in the C-suite is everything too.
The other thing you said right before we went to break is that if Klarna went public, you wouldn't buy into the IPO. Today we also had a firm reporting. This is another derivative of the consumer play. This is about the retailer as well. Why not Klarna? Would you buy a firm instead?
No, I haven't actually gone into a firm either. So here's my position on buy now, pay later. A really clever product, right? A clever product in the way that I think Zoom was a clever product that ultimately belonged with a Microsoft, or that Microsoft should have its own version. Whether it's a firm or Klarna with buy now, pay later, great products that I think belong to as part of the suite of bigger financials like Visas and MasterCards. So my concern, Chanel, is twofold. It's concentration of the kind of product it is. I do think regulation hasn't yet reared its head in the way that it could. I think this is unregulated consumer credit that may get more attention, frankly, under the next administration, number two. And number three, the competition's getting a lot bigger because the incumbents are trying to push back on the share of wallet that these kinds of businesses are taking.
And just before I let you go, I'm curious to hear your thoughts on the IPO landscape. Of course, you do so much detailed single stock work. Does the fact that we aren't really seeing a lot of these valuable companies, OpenAI, for example, $100 billion not coming into the public markets, how do you think about that as an investor?
Well, let's take OpenAI as a really specific example. I think OpenAI, given what it's doing at the cutting edge of artificial intelligence, probably doesn't want to be doing its innovation under the public lens in terms of the scrutiny, the disclosure that's required, the pressure to hit quarterly numbers. So I put that in its own special bucket. Cutting edge companies, you know, there are puts and takes on whether you want to be in the glare of the public eye. There are other businesses, the IPO pipeline, everyone thought it was going to be a lot more robust by now, the end of the year.
And I have to get your take on this. The FT reporting now that Bill Ackman is considering bringing an IPO back for his closed-end fund in the United States. Would you be a buyer?
I would not. I wouldn't have been a buyer when it got shut down a month ago. I'm not a buyer now with all the kickers that are being suggested are going to be thrown in there, like access to future issuances and warrants. I think there needs to be a real differentiator. I have great respect for Bill Ackman as an investor. The edge hasn't been clearly articulated.
Threadneedle Ventures founder Ann Berry, we thank you so very much for all the things that are coming up in the equity pipeline, as well all of those big earnings today. We're going to talk more about that Ackman IPO and OpenAI, about talks of a fresh round of funding for OpenAI and a brand new valuation, and it's a large one. We're going to talk about that and more in our Wall Street Beat next. This is Bloomberg.
Jobs day like Bloomberg.
This is Bloomberg Open Interest. Let's take a look at the stock market. Of course, about 21 minutes into the trade, you can see we have green on the screen. The S&P 500 up 0.3%. The NASDAQ 100 out of nowhere is your leader. Those big tech stocks, even though we had that NVIDIA disappointment. NVIDIA shares recouping some of their losses, now down about 1.8%. That had been 4% earlier in the session, so you can see that reflected in the index overall. And the small caps, they were the leader, but now they're not. The Russell 2000 currently up about 0.2%, Shanali.
And it's time now for the Wall Street Beat. Bill Ackman considering gifting early investors in Pershing Square USA the right to buy extra shares in the future at a fixed price through warrants. That's according to a report this morning by the Financial Times. Here with more is Bloomberg's Bailey Lipschultz, who's been covering all the twists and turns of this story. What would be different, frankly, Bailey, about this offering?
This, Shonali, would be a way to entice investors to buy into a closed-end fund. Traditionally, at least in the last few years, they trade well below the IPO price. They traded at a discount. So that means that if you're buying at that $20 price that he was pushing, then you're expecting when it opens it to trade down to $18, $17. So you would be sitting on an automatic loss. The goal with this, according to the FT report, would be to incentivize investors to buy because therefore, if the stock goes higher, you can buy back at that IPO price. So you're getting a discount in the long run.
Why is he so married, Katie, to this closed-end fund structure? We've talked about this. You're like ETF queen. You've seen other hedge fund managers really turn to the ETF structure. Why doesn't he just do that?
Yeah, Scott Besson actually among the group of portfolio managers filing for an ETF just a couple weeks ago. And this is a debate that I've had with Eric Balchunas over in Bloomberg Intelligence, ETFs versus closed-end funds. It feels like issuers love closed-end funds, but investors prefer ETFs. But if you're someone like Bill Ackman, you want that permanent capital. A closed-end fund structure provides you that because you can't necessarily redeem the shares.
Guaranteed fees.
Exactly.
And that helps for Ackman pushing actual Pershing Square proper public because you have that fee pool.
But even with these sweeteners, I mean, an ETF would go towards solving the problem of why wouldn't I just wait for this to trade at a discount? Are these sweeteners enough to entice them even with that risk of this trading at a discount?
Well, that'll be interesting to see. And again, this is all reporting, so we don't know what Ackman is going to do. But is it enough to bring what seemingly was less than $2 billion to $25 billion? Oof. I don't know. And that's really been kind of the calling card was Ackman has this following of people on X who would be willing to buy into the IPO. But when you saw it go from 25 to 12 to 4 to 2 to pulled, that's not showing up.
Those are hard to convert into investors. To convert followers into investors, Shonali, it's a tall order. It's not guaranteed.
Another tall order out there that I want to get your opinion on here, Bailey, is this OpenAI potential funding round. Thrive Capital reported to have been putting in here $1 billion into this funding round. A lot of money. It's supposed to be valued at about $100 billion. However, they've been in talks for this for a while. What do you make of it?
Going back to the end of last year, and really the big thing has been the scarcity value of AI names and the scarcity value of an OpenAI in the private markets. We're seeing investors kind of jumping over one another to get a piece of some of these names, OpenAI, Anthropic, you name it. The fact that this is kind of dragged on longer is more interesting because it's a question of who do you want on your cap table, and also what does this mean for a potential exit down the road? Is that a 25 event? Is that something we see in 27, or is it similar to SpaceX where private for kind of as long as you want?
Maybe better stay private. Who knows?
Maybe. I mean, obviously Elon Musk agrees when it comes to SpaceX. 10 seconds. Is OpenAI a startup?
Nah, by definition, maybe, I guess, but $100 billion and kind of being a household name that everyone knows, it's kind of hard to sell, at least to me. I don't know.
All right, Bloomberg's Bailey Lipschultz, always appreciate your reporting. Let's get to the trading diary now. What you need to be watching this week. Today, the party continues. We get earnings from Dell, Lululemon, and Ulta Beauty after the bell. We also hear from Atlanta Fed President Raphael Bostic this afternoon. Tonight, it's that much anticipated interview, that joint interview with Kamala Harris and Tim Walz that airs on CNN. And tomorrow, we round out the week with July's PCE inflation data. Now, coming up in the next hour, we'll speak to John Stoltzfus from Oppenheimer. He joins to talk about his bullish tech outlook and talk inflation. We're going to do that with the CEO of Dickey's Barbecue Restaurants. All that ahead. This is Bloomberg. into the U.S. trading day. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today. And coming up, NVIDIA pays the price for lofty expectations. CEO Jensen Huang tries to boost confidence in a Bloomberg exclusive. And attention is now turning back to the macro landscape. Fresh data this morning showing that the economy is still strong. Katie.
Plus, another step forward in U.S.-China relations. President Xi meets with National Security Advisor Jake Sullivan for the first time. We'll keep an eye on that and more, but let's get a check on these markets 30 minutes into the trade. As I said, you can see really a rally is building right now as NVIDIA pairs some of its losses. The S&P 500 currently up about 0.7%. You also have the NASDAQ 100 really accelerating here. Look at it, 1.3% higher. You wouldn't have guessed that at about 4:30 p.m. yesterday afternoon, but here we are at 10 a.m. on this Thursday. Meanwhile, you take a look at that 10-year Treasury yield. Losses in the bond market, but very slight. The 10-year Treasury yield currently up about 3 basis points, Shonali.
It's fascinating as well. You have a lot of economic data this morning, bringing you some breaking now. U.S. July pending home sales falling 5.5% month over month. The estimate was up 0.2%. U.S. July pending home sales falling 4.6% from the previous year. Joining us now is John Stoltzfus. He's the chief investment strategist at Oppenheimer. He has one of the more bullish calls for the S&P 500. He expects the benchmark to end the year at 5,900. And the question is, with all of this mixed economic data, with the excitement being dragged out of NVIDIA, what gets us there?
Well, I think what gets us there are better earnings. We can already see it with the S&P 500. When I went to my EA page on my Bloomberg today, I look, we've got earnings growth at over 11%. And revenue growth has picked up very nicely. It moved up from 4.5 up higher than that. So all of that looks good. I think the biggest worry would be for Wall Street right now is really questions as to where we go after the elections. We need to see who wins and what the policy is from both candidates and how it appears for business.
We'll definitely want to ask more about those elections. I want to marinate for a moment on the economic data.
Sure.
If you have Americans who are not confident enough to buy a home, how can you be confident that they are willing to spend more money in this economy over the next 6 to 12 months?
Well, I think what we've seen is in the recent numbers that came out from the conference board, it looked like sentiment improved somewhat amongst consumers, but related to home buying, the main thing is interest rates, and we've got to see the first cut from the Fed. I think a 25 bips cut is not going to do a heck of a lot for mortgage rates, but I do think what it will do is it's like a down payment from the Fed for Main Street and for Wall Street, saying more to come as needed. And already my recollection is the mortgage rate came down to around 6.5% or so, if I'm correct, just over the course of the last few days. That's a lot better than where it was before. And people it becomes more affordable as we go forward. So we'll have to see.
Yeah, and of course, 6.5%, it's a lot better than 7+%, but it's not 4%. It definitely could be better. But as you look ahead to this rate cutting cycle that it seems like we're beginning next month, how significant do you think it would be? How much magnitude do you think that the Fed actually has behind them as they take off here? And how much does it matter for the equity market?
Well, I think it does matter for the equity market in that the equity market has been looking for a cut in rates. I always think it's the highly leveraged community that has complained the most, because the end of free money has been really a good thing in the sense that bond issuers now pay for the privilege of borrowing money again, and bond buyers get something in return. It causes CFOs to really sharpen their pencils more, as we used to say, when it comes to planning out for business and the responsibility of borrowing and investment for corporations. So overall, I think if we get 25 bips, I think the market will settle in on that. There's a crowd that wants to see 50, but then if we see 50, that's when some bears are likely to say there must be trouble out there, and that's why they're doing 50 for the first.
What do they see that we don't? I can already hear them saying that. But when you think about the highly indebted community that you're speaking of, I want to bring this conversation to the small cap index. It's my favorite place to go. You think about some of the companies in that index, they tend to have more debt and more debt that is shorter term in nature than their larger peers. When you think about who really needs those rate cuts, it feels specifically like those small caps that people keep trying to rotate into.
Yeah, and we think that once you begin to see the cuts coming through, and we think it's 25 bips in September, followed by 25 bips after the election in November, and possibly another 25 in December on an as-needed basis. And that will likely see, once you get, even the first cut is liable to establish more sustainability in these rallies we've seen in the smalls. And also the smalls, the S&P 600 is a better quality small cap index. I think you have to have a year of profitability before you're admitted there. And the Russell 2000, 40% of those companies are not profitable. Plus, on top of that, it tends to be the Russell 2000 is when the tide comes in and all ships float, the Russell 2000 leads, so it's not my favorite indicator in the small caps. But the 600 I'd be watching right now, and it's been improved in performance.
I want to go back to something you were saying before. Earnings are going to be what drives this market higher. At the same time, you have investors who are concerned about a growth scare. They may be more or less concerned after they see next Friday's jobs report. How do you bring this together? If you look at the macro and it's weakening, but you look at the current earnings and they're okay, what leads the way?
Yeah. Pardon?
What leads the way?
Well, I think what leads the way is you're beginning to see, for example, consumer discretionary is one of the best earning sectors this time. And just today we heard there was an electronics vendor that did a lot better than was expected. That kind of thing, I think what leads is consumer discretionary. The financials are one of the leading sectors. Healthcare is doing well in terms of earnings. It's a broader, we've got now 4 sectors that are double-digit earnings growers in the second quarter. And with that, I think we've only got 2 negative growth sectors. And as last I recall, that was industrials, which was a very modest loss or a reduction of earnings, and the other one was materials. So I think gradually, as you see sustainability of the economy, the likelihood that we get a soft landing, I think that's the main thing to look for. It's right-size expectations, and you might be pleasantly surprised, as we often have been in the past.
Well, to bring it back to NVIDIA, because every conversation has to come back to NVIDIA today, I believe that you made the point that if you take a look at the index level, that earnings growth is expected at about 11% looking forward. But as we learned with NVIDIA, it just feels like the bar is very high. These expectations have gotten to the point where they're unrealistic. So you think about what the forward ahead picture looks like. I mean, is it possible that we've peaked when it comes to earnings?
Well, you know, I don't think so. I don't think we've arrived at peak earnings. I can't specifically comment on NVIDIA because I manage money for the firm, and we have fairly strict parameters in terms of my commentary. Can be on sectors, style, and a variety of other things. But related to any technology company, you can't expect that every quarter is going to be a celebration. And the likelihood that you will get, after spectacular results of late, that you'll continue at the same pace. And then there's going to be competitors. Just in the last week or so, a competitor has arrived on screen that at least says they've got a chip that can be very highly competitive, with a number of companies in that area of AI.
This is pretty fascinating. We were talking about how the indices have been rising despite that NVIDIA drop today. Even the Philadelphia Semiconductor Index is up more than 1% today. NVIDIA is actually the only stock in the red in that index at this moment. If you think about what we saw out of NVIDIA, what does this say for kind of the rest of the AI story? Because it looks like investors are largely shrugging it off.
Yeah, so that's a great question. I think the reality is that AI is not solely relegated to technology. It's all the 11 sectors. So the other 9 sectors, companies can benefit by, and they are, extending CapEx into AI by becoming more competitive, more efficient with the use of AI. So I think it's the knockoff effect in a positive sense that we'll likely be looking at.
So the broadening out of that AI story, John, don't go anywhere. You're sticking with us, of course. But let's take a look at the stocks that are moving underneath the hood this hour. We're going to do that with Abigail Doolittle.
And we've got a big laggard on our hands this morning. Dollar General down about 25%, the worst day on record going back to when the company started trading as a public company back in 2009. They missed estimates in a massive way. They slashed the outlook. They're talking about their core customer really disappearing, not as much strength there, in part because of the customer, but also in part because of competition from the likes of Walmart. Investors clearly not liking this. That turnaround that's been promised not happening. Taking a look at the shares of the big one on the day, turning out to be less of a big deal. Nvidia down about 3.4%. Options had promised a much bigger move. We did have that initially in the after hours yesterday after folks were disappointed by the guide that beat the overall estimate, but it wasn't a massive blowout, nor was the beat. Their beat for sales about 4%, the beat for earnings, adjusted earnings, 5.5%. So these numbers, while still big and big growth, a little bit less lofty than in the past. The stock down about 3.2%. And then finally, let's end on a bright spot. We do have the shares of Best Buy up 15.3%. This may be the best day since 2017. They beat adjusted earnings by more than 15%. And they're talking about the idea that customers are upgrading their pandemic technology. They're looking for new technology. I will note there's a greater than 6% short interest on this stock. So that could be a bit of it, that the idea that this company is doing a little bit better. One of the consumer companies, we've had these mixed tells on retailers are doing well or less well. Well, Best Buy seems to be one that's doing well, and those shorts don't want to be a part of it.
All right, Abigail Doolittle, thank you so much. And just to meditate on the NASDAQ 100, interesting to see really gains build here, even as you see losses in NVIDIA re-deepen right now. A fascinating dynamic happening underneath the surface of the market. We're going to continue to keep an eye on that. Up next, more with John Stoltzfus. And before we head to break, speaking of NVIDIA, here's the CEO addressing supply chain concerns around his company's AI chips.
The demand is so great, but we're going to have lots and lots of supply. And we will be able to ramp starting in Q4.
And now for high interest, a look at what's making headlines around the world. Tesla CEO Elon Musk is hiring a Republican advisor to help steer his political work. And the move suggests that Musk will become more involved in politics and get out the vote efforts. Former President Trump has suggested recently that he would add Musk to his cabinet if the Tesla CEO had time for it. And America's top security official is highlighting Vice President Kamala Harris's credentials and experience in dealing with China's top leadership in Beijing earlier today. After a 3-day visit, National Security Advisor Jake Sullivan spoke with President Xi and high-level officials in talks aimed at stabilizing ties between the two countries ahead of the U.S. election. And the Supreme Court is maintaining a temporary pause on President Biden's latest push to reduce student loan bills. The Supreme Court's order will mean more uncertainty for 8 million borrowers who are already enrolled in Biden's so-called SAVE plan. The Biden administration said it would continue to defend its debt relief plan in court, Katie.
And we're back now with John Stoltzfus. He is Oppenheimer Chief Investment Strategist joining us at the desk. And let's stick with politics. We mentioned the election a little bit in the previous block, but we talk about the Trump trade, we talk about the Harris trade. If you zoom out and you think about the common denominator between both potential administrations, what do you find?
Well, I think the common denominator is both plan to spend, continue the spending process, and that tends to be what we find is what worries both institutions as well as private investors when they look at the longer term effect for the U.S. is what about the national debt?
Yeah.
Fortunately, in many ways, as Bill Gross used to say, we are the cleanest shirt in a hamper of dirty shirts. So comparatively, if you look at the debt of other countries, if you look at the accountability, the transparency and governance, the U.S. comes out on top on a relative basis there, which near term is good for us. But we've got to think it's the electorate that has to get involved, and
right.
It's not enough to vote. If you don't like what either side of the aisle is doing related to spending, you got to get on the phone or send a text and get 5 of your friends to do the same and get 5 of their friends to do the same.
Right.
And do what in many ways politicians have known for years the groups that support them have done to be successful to get them to pay attention, because politicians know one thing primarily, and that's how to get reelected.
Right. Well, bringing it to the investment world, I'm glad that you brought up the relative value nature of the U.S. versus the rest of the world, because my question to you was going to be, how do you invest around this? Because this has been a concern out there for a long time. It sounds like what you're saying, in the near term, investors don't need to worry about it, but how are you defining that timeline?
Well, I'd say they need to be concerned about it, but not have it be an overriding worry at this point. And I think the first thing is, I've been in this business for 41 years, 12 years with Oppenheimer, and in the 12 years at Oppenheimer, we've always been overweight U.S. while maintaining some kind of meaningful exposure both to emerging markets as well as to developed international markets, in realization that on a valuation basis, opportunity in terms of periods of when global growth is good. They have a lot of old-fashioned sectors that do well at those times. But we would say it's important to diversify assets, and it's across asset classes. It's also across style, value versus growth, as well as looking at sector emphasis and taking a look and seeing where it's not enough to innovate, but the thing is to see where that innovation pays off. We were talking before, it's got to be across all 11 sectors.
I want to go back to this national debt issue and tie it into the markets as well,
Sure.
because when you look at both sides, there is not a lot of prudence here fiscally. And when you look at some of the plans being put forward, they could impact investors meaningfully. You think about potentially a Democratic plan to tax unrealized gains. How would that change investor behavior?
Oh, I think to tax unrealized capital gains, that would be a very, very bad thing. And I think that's almost unanimously that I know of in the financial community is the thinking of that. The question comes in, well, so if they tax your unrealized capital gains, what happens if the value of what you owe goes down? Do you get a tax credit the next year, or when does that happen? And the disruption that causes, what could be a sell-off that could occur, we think that's not practical thinking, quite frankly.
What about other potential issues that are being brought forward here with the way that the Harris plan is dealing with the economy, or even the Trump plan in some fashion too? You see certain sectors like electric vehicles, there are worries there about what that would look like in a Trump administration. Where are the pain points in your view?
Well, I would have to say the pain points primarily with the Trump administration would be to what level would the tariffs be elevated at some point? You know, he's always prone to real estate developer negotiation dramatics by saying we could go to 100% tariffs or whatever, but what would they really look like and what would ultimately be the effect? In the past, when the initial tariffs went up in the first round during the Trump administration, Chinese producers ate most of those tariffs for one thing, and then they moved facilities that manufactured to other countries where it wouldn't apply. There's a lot of things that happen. But we'd have to say, related to the idea of taxing higher taxes for corporations, that would likely reinvigorate what we used to see, which was corporations moving to Ireland and to different places to establish headquarters elsewhere. Already it's happened with more progressive states that have higher taxes.
Right.
At this point have lost a lot of taxpayer base to states that have more practical tax regimes.
And John, we only have about a minute left with you, but we were having a great conversation with Rebecca Patterson a couple days ago, and she made the point that when it comes to timing when you put your election trade, your election investment on, wait until October. Things are going to change a lot. What are you thinking when it comes to actually actioning some of these thoughts?
Well, one thing is we tend to be investors or intermediate to longer term investors, so we're always invested. We may not be always fully invested in equities or any particular area of the markets, but we're diversified across the board, overweight equities. We would have to think in October we'll have to look and see what looks primarily vulnerable to who appears to be ahead at that time and what would the costs of policy be.
One more question coming in from a terminal customer. What level of upper U.S. debt to GDP should start causing here liquidity and auction problems here? I had a similar question. At what point does the budget discussion at the end of the year start to impact markets, right?
I think it really, that would depend on that October, where we got, by that point, hopefully we have a better idea what policy is going to look like in terms of the near term. But overall, you know, so far we've seen China and Japan and other countries reduce their exposure to U.S. treasuries, but a lot of that has been filled in by individual and corporate investors who buy U.S. debt because they like the yield, they like the relative strength of the dollar, even as it weakens versus other currencies. The long-term effect of the dollar when you invest in U.S. debt has not been a bad investment. Past performance, no guarantee for future results, of course.
John, we appreciate your time today. That is John Stoltzfus, Oppenheimer, Chief Investment Strategist all over these markets. And I want to take a quick check on NVIDIA because we are watching shares dive deeper on the day. Now about 4.6% lower. It had been as much as 5% lower. Interestingly enough, you are seeing it drag down even a little bit that Philadelphia Semiconductor Index that's now up only about 0.9%. It was up more than 1%. We will keep an eye on NVIDIA throughout the morning here, certainly one of the big stories of the day. But still ahead, chicken wings and chill. Could Chick-fil-A be challenging Netflix with its own streaming platform? We will find out in Social Climbers up next. This is Bloomberg.
Bloomberg.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, a high five for Five Below. The discount retailer is reporting second quarter sales that beat expectations. Wall Street largely positive on the report, saying that Five Below will find its footing soon again. Next up, football fans beware. Disney and DirecTV locked in a carriage dispute that could see ESPN go dark just as the college football season and Monday Night Football kicks off. The deadline to reach an agreement is Sunday. And finally, could Chick-fil-A soon become Flick-fil-A? Reports are making the rounds on social media that the chicken chain has plans to start its own streaming platform. The content will reportedly include game shows, talk shows, and documentaries. Chick-fil-A hasn't responded to a request for comment, which is a shame because I have a lot of questions. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Sonali.
I heard you laughing at that dad joke, Katie. Don't lie. We're going to get a check on these markets now. We have, of course, markets higher on the morning. Impressive given those NVIDIA results. We have the S&P 500 now 0.5% higher, and the NASDAQ 100 0.8% higher. Flip up the board, look at NVIDIA because, of course, we have seen more losses on the day. Coming up, the latest report on prices. We're going to speak to the CEO of Dickey's Barbecue on what she's seeing next. This is Bloomberg. Tomorrow morning, we're going to get the PCE price index, and that is the Fed's preferred gauge of inflation. Another month of encouraging data would all but cement a September rate cut. Let's talk about what this means for food prices. Joining us now is Laura Ray Dickey, the CEO of Dickey's Barbecue Restaurants. Close eye here that you have on what prices look like under the surface and what consumers are able to stomach right now. Of course, Labor Day is around the weekend here, and a lot of people are going to want to have cookouts. Do you feel like you have to lower prices for them to really serve their friends and family the way they want to?
We absolutely do. You know, one of the great things about holiday is the rest and relaxation, but it also means inflated prices. So all of the protein markets are up. That's chicken, that's pork, that's beef. Chicken alone is up over 20 cents a pound from last month. So that certainly puts some pressure on everyone in their wallet, but we absolutely have to incentivize folks with value, those right kind of deals, because everybody feels the pressure for spending right now.
If you have protein prices still very sticky, still high here, how do you then make sure that you're able to both keep prices low for consumers, but profits higher for yourself?
Absolutely. Great question. It is all about loyalty. You know, that's really where we have seen such an increase in our loyalty members. So where we're able to give discounts for folks that buy more often with us, and that's beneficial to everybody. So we've seen a huge uptick, almost 16% in the past quarter of loyalty members. That's definitely something that's a win-win for both the brand and for guests. And we've also seen over $16 million in business in the last quarter that has some sort of a discount or a coupon. So it's very much a requirement for the business to certainly be profitable, but to offer the best deals possible. And so folks are looking for family packs, they're looking for big yellow boxes, they're looking for options that have leftovers so they can squeeze that second or third meal of barbecue out of anything that they purchase.
That's really interesting because I was taking a look over at your points and I see that you've only raised prices twice in the last 4 years. You think about the path of inflation over the past 4 years and definitely would make you a little bit nauseous there. But I want to talk a little bit more about really the state of the consumer because we just lived through a raft of restaurant earnings. And it's interesting, you have the likes of McDonald's talking about this choosy consumer. You have Cava talking about how they're seeing traditional restaurant diners trade down into you know, these fast casual chains. Where are you right now in that conversation?
You know, absolutely. And what has worked well for us is that as a fast casual brand, so you come in, we have that pit smoked barbecue on site. So you have all of the artisan quality, but we're still that quick serve. It's a 2-minute order to pay. So you walk in and you have our pit master at the block and they're chopping and hand slicing. So you have great value, you have great quality, but we also are able to really expand to what our guests or contract to what our guests are wanting. We can offer, you know, those individual meals all the way up to the family pack, but being fast casual, we have casual diners downgrading to us, which is where we're safe. Really where the market is playing right now. But we're definitely seeing everybody from where they traditionally spending less. So we also have maybe some of our more regular guests that are seeking out our value menu. You know, we've expanded that as well. And we're definitely making sure that we're very mindful that we have price point options across the menu. So folks that are really wanting to stay in that $10 plate as opposed to a $20 plate option, you really have to have variety because there are definitely folks all over the spectrum that are looking for values like they never have before.
And of course, we're talking about the U.S. diner primarily, but of course, you have big expansion plans internationally as well. You're opening several international locations by the end of the fourth quarter, rather. We're talking about Mexico, the Philippines, the U.K. How do you bring Texas barbecue to the rest of the world? What does that sort of taste education process look like?
Well, and that's a great way to put it. It is, you know, there's still this wonderful love of Texas brands and heritage, authentic brands. We're a family brand. We're third generation. We've been around since 1941. So we bring an authenticity that I think folks really enjoy. And we bring that quality. We bring the cooking methods overseas with us. And so while we have over 500 locations in the U.S. that we also are expanding internationally, we have the same base menu. We have an adoption of a local favorites, but we keep the same sauces, the same primary proteins, the same rubs. We import our rubs and sauce. So they're really getting that Texas flavor. And it's really wonderful to see folks that embrace that. We have as many expats as we do folks that are really just, you know, wanting a little taste of Texas.
You know, I want to also talk about what's happening here at home, because you have told us here that you're shifting customers, shifting to curbside pickup to avoid delivery tips and charges. At the same time, you have plans being set forth by the presidential candidates about how tips are going to be taxed in the future. This could have pretty drastic ramifications in terms of how people tip, how people hire. What do you think of these plans?
I absolutely think one of the best things to really put some invigoration back into the workforce is to not tax tips. Doesn't matter what political side of the spectrum you're on, that would be a win-win for everybody, because it immediately puts folks' hard-earned money back in their pockets. That doesn't make a difference for us as a franchisor, as a brand, but it makes an immediate difference for our team members. So let folks keep their tips. That would increase their spending power. And it's a wonderful incentive to have folks stay engaged in the workforce. And we definitely have a lot of team members, pit crew members, as we call them, that have, that love of what they do, but without that additional ability to really be able to have those tips, they're having a very hard time.
How do you see this dynamic playing out in terms of how you pay employees? It's interesting. We're talking about pricing, price of goods, price of your goods, but also the price of workers here, the cost of labor. Have you had to see a lot of upward pressure there in wages? And are you willing to really supplement that more in lieu of that pressure downward on tips that we're seeing from customers?
Absolutely. And I think that's one of the things that served us well as a brand, is that we have always paid well above minimum wage. So when folks were talking about increasing the minimum wage, that wasn't something that had directly affected us for quite a while, because we had already been at over $10 in most markets, all markets at minimum $10 for a starting wage, and up from there. So we were able to withstand that because we had already been there. It's also, again, back to that tipped incentive for folks. Even though our team members are not tipped employees, there's a lot of opportunity. And I think it also allows less pressure for the guests to actually be able to tip less, and to have then the folks that they're intending to tip retain more of it. So it's a win-win all around, but it's a really nice supplement for performance and really that incentive to stay engaged in the workforce and do that little bit extra. So I think it's a net win-win, but I do think that businesses absolutely in every aspect have to take care of team members, because that's who takes care of the guest. That's who takes care of the business. That's who takes care of the quality of the food, in our case, the barbecue. So you really have to invest there first.
And sticking with politics, because we're just months away from the U.S. presidential election, looking at your biography, you've been with Dickies for over 15 years here. You took over as CEO in 2017. So you've obviously led this company under both Republican and Democratic administrations. When you take a look at forward planning, what's next? I mean, does a Harris presidency or a Trump presidency affect how you do business?
Great question. And since we are over 82 years old, we have seen every type of administration. We have seen every type of political climate. In my career, I have seen seat changes on both sides of the aisle. You know what? And while it definitely has an impact, I think that the principle will stay the same. Whereas if we stay focused on optimism, on finding a path or making one, of taking care of our team members and doing right by the guests with value, it certainly has business pressure. I do hope that the economists are right, that we're all seeing relief coming from inflation, because we're certainly more comfortable when our guests are more comfortable spending more. But we have flexibility. We have a lot of proteins on our menu. We have a lot of sides. We have a lot of options. It allows us opportunity, not only with our size and our purchasing power to weather those type of storms, but also to provide options for the guests. So while, certainly either administration would have an impact, we've seen it both ways, and we'll keep serving great Texas barbecue either way.
Laura, as a CEO of a barbecue chain here, what are you ordering for Labor Day?
Oh, definitely giant stuffed bakers. That I would highly recommend to everybody. That is that gorgeous pit smoked baked potato that you stuff it with butter and cheese and sour cream and chives, and then top it with that barbecue brisket. I think there's nothing better than that.
All right. Well, it sounds like you're going to have a great weekend. Enjoy it when you get there, and really appreciate you taking the time with us today. That is Laura Ray Dickey of Dickey's Barbecue Restaurants. Meanwhile, let's take a check at these markets right now as NVIDIA losses camp out around 4%. Here's Abigail Doolittle.
Well, we have an interesting tug of war. Overall, the Bulls are winning today. And up top, CrowdStrike, not probably the stock effect a lot of folks expected, given the fact that they did cut their full-year outlook on that debacle back in July. Right now, up about 5%. It's seen that the quarter that was and the cut to the outlook, not as bad as feared. Tesla up 2.6%. William Blair saying that their energy storage unit underappreciated. Dollar Tree down 7.4%. In sympathy with Dollar General, which is down significantly, down 25%, a record plunge on a big miss and slashing the outlook. NetApp, the storage company, down 7.2%. This is an interesting one. They beat, they raised, but investors not liking it. Let's take a look at NVIDIA, not just today, because we do have the shares lower on the day, but on the week, right now down about 6.3%. And of course, the quarter was good. They beat. They didn't beat as much as they usually do by 4 to 5% on both top and bottom line. They raised, but they didn't raise as much as they could have actually in the past, and nowhere near the highest estimate. Some delays with key chips. So net, we do have the stock down. From a technical perspective, we took a look at this chart earlier yesterday, and you can see the near-term uptrend in May when it started to reverse, created this wobbliness, came out of the overbought RSI, ultimately into that early August drop. Now we have the shares clearly reversing the near-term uptrend, clearly rounding down. The RSI or momentum also falling. All of this suggests that we're likely to see more weakness in NVIDIA ahead. It's going to be, it looks like based on this action, a little bit slower and more thoughtful as opposed to outright selling, at least right now. But this chart does not speak well for NVIDIA in the near term.
Abigail, we thank you so very much for your time. Coming up, we're going to turn to politics, though. China urging the Biden administration to adopt a rational relationship ahead of the election. We're going to talk about exactly what that means next. This is Bloomberg.
Well, today, Vice President Kamala Harris and her running mate Tim Walz will be interviewed by CNN in the first major interview since they announced their candidacy for presidency. Let's get the details now from Kaylee Lyons. She's the co-anchor of Bloomberg Balance of Power, joining us from D.C. So first question here, Kaylee, why is this a joint interview? Why aren't we hearing directly from Kamala Harris?
Well, you will hear directly from her. She just will be sitting next to her running mate, Tim Walz. Katie, this is something that Republicans already are criticizing her heavily for, suggesting it's weak that she is not sitting down for this interview alone. I would just say that this is not something that doesn't have historic precedent. Joe Biden did a joint interview with Barack Obama when Obama tapped him to be his vice president. We saw Hillary Clinton and Tim Kaine do this in 2016. And even in July, after Donald Trump tapped J.D. Vance to be his running mate, they sat down for a joint interview just days later on Fox. So this isn't unusual, but it does come at a time when Harris is under more scrutiny, considering over the course of her candidacy, now about 5.5 weeks old, she has yet to do something like this, answering direct questions from a journalist, in this case, Dana Bash of CNN. This interview, of course, will air at 9 p.m. tonight. We haven't really seen her do this yet. She's only been really reading from a teleprompter on stage in Chicago at the DNC or in the rallies that she has done thus far. So this is going to be the real first chance many voters in this election cycle see to actually have her defend under scrutiny some of her policy positions that she has put forward.
And you make a good point that it's not unusual to see the two candidates together. What is unusual is just how compressed this campaign is. Yeah. Of course, she's only been campaigning for a couple weeks, and in that time, we haven't seen a solo appearance like this. And with that being said, what is the goal for the Harris camp tonight? What are they hoping to get out of this interview?
Well, what they really want to do, Katie, is not lose any momentum that they have been able to build over the course of the last month and change. She is doing incredibly well to this point in her candidacy, both in polls and fundraising, as they've crossed the $500 million fundraising mark in polls, including some out today from Fox News in the Sun Belt states, or USA Suffolk University putting out a national poll that shows her leading Trump by about 4 points. The momentum is on her side. What the campaign does not want to do is arrest that in any way or have her make a misstep that could potentially be weaponized against her and halt that forward progress. It is worth keeping in mind as well that we will see less than 2 weeks from now Harris sharing a stage with Donald Trump in the debate on ABC on September 10th. So doing this interview beforehand could kind of go one of two ways. On the one hand, if she does make a misstep, she might have the opportunity to correct it at that debate in September. But on the other hand, a misstep could be something that could be weaponized by Donald Trump and used against her in that very same forum. So what they really just want to accomplish here is making sure they can maintain the status quo and that nothing about the enthusiasm and excitement the Democratic Party is currently feeling about her candidacy changes after this interview.
To that end, how much do you actually expect her to bring up any new policy and any new rhetoric around how she feels about the key issues like the economy or immigration, given the tightrope that they've been walking on? Some of the proposals that they've put out already have really garnered some criticism from both sides of the aisle.
Yeah, Shanali, I'm not sure this is going to be so much about new policy, but getting more explicit and specific about what her policy actually will entail. We, of course, have heard her outline broad ideas of what she would like to do to help the middle class, for example, floating the idea of $25,000 down payment assistance to first-time homebuyers, doing other things to incentivize increased housing supply, as well as this notion of no taxing on tips, something Donald Trump also supports, and price gouging restraints on a federal level, trying to cap prices, not necessarily cap them, but control prices in some ways in grocery store. How that works exactly is what we don't know. How she plans to pay for these things, if she's talking about increased subsidies in areas like housing, those are the specific details that we don't yet have answers to, that she may have to answer for in this interview. There's, of course, other things she could be pressed on as well, specifically when it comes to Israel and the ongoing war in Gaza, where exactly she stands on that, and she could face some tough questions as well when it comes to the border. That, of course, is one of her weaker points, something that Republicans have been weaponizing against her as her time overseeing the border during this administration, where she has now served for over 3.5 years. So she could face some difficult moments in that regard, too.
There's another critical situation happening right now. You have the National Security Advisor in the Biden administration, Jake Sullivan, meeting with China's President Xi Jinping. How do you expect Harris's policies to either dovetail or part from how President Joe Biden has dealt with China, particularly because this tough on China stance has been underpinning this election cycle?
Well, that's exactly right, Shanali. Obviously, it is popular in Washington, frankly bipartisan, to be hawkish on China. But really what Jake Sullivan's trip is an effort to do, and something we've seen this administration, including Kamala Harris, doing during it, is trying to normalize relations with China, at least keep a dialogue going for all of the ways in which the U.S. is trying to put restraint on China's development when it comes to critical technologies, using things like export controls. They also want to make sure that there are open lines of communication so that this relationship doesn't get more tense in a negative way. Jake Sullivan has said in his trip to China, in which he met with Xi Jinping, that Kamala Harris does have the foreign policy experience, that she is well known to Xi. She, of course, has met with him on the sidelines of a summit in Thailand, though she has not visited Beijing herself during this administration, but essentially that she would adopt very similar policy to what Biden has adopted in trying to normalize this relationship. Of course, for China, they have to consider what a Harris policy might actually look like relative to the other possibility, which is another Donald Trump presidency. Knowing that Trump has threatened 60% tariffs on all Chinese goods, has been very hawkish on the trade rhetoric specifically. And that's something I'm interested to see if Kamala Harris may get pressed on tonight. What exactly she would like to do in terms of trade with China, knowing that this administration she has been a part of has largely left intact the tariffs that were put into place during the Trump administration. Is that something she wishes to continue? Does she want to see those expand? We don't necessarily have much clarity into her thoughts on that yet, but those could emerge tonight and in the coming weeks.
Well, you touched on this a little bit, but compare and contrast here what we know from how Donald Trump would handle the relationship with China. Of course, it feels like both sides of the aisles are sort of united in that they want to be hawkish on China, but Donald Trump, we have more specifics there.
Yeah, we do. And it also comes from his running mate, Senator J.D. Vance, the vice presidential nominee on the Republican side, was actually taking direct aim at China when he was in Erie, Pennsylvania yesterday, talking about how more things should be made in America. It's this kind of protectionist, populist policy that we have seen both of them espouse in a more vocal, outward way than we necessarily have seen from the Harris-Walz ticket to this point. Donald Trump, in addition to talking about tariffs he would like to see put in place on China of 60% plus, of course, has indicated those tariffs could be a blanket policy, 10% on all goods coming into the United States. But there also is this kind of counter notion as to whether or not China would actually welcome a second Trump presidency. Of course, you had the phase one trade deal that went in place during his first administration. There is a thought in some circles. I was speaking with Mary Lovely of the Peterson Institute about this yesterday, that actually he could be friendlier to China, allow China to do more in terms of exerting its own territorial authority in its mind in Taiwan. This notion that maybe Donald Trump wouldn't be so eager to jump to Taiwan's defense, considering he actually suggested in a Bloomberg Business Week interview with a few of our colleagues here this summer that he thinks Taiwan should be paying for its own defense, that the U.S. shouldn't be contributing in that way. So it's kind of a two-sided story here. On the one hand, tariffs obviously potentially could be detrimental to China's economy. On the other hand, geopolitically, you could see how there may be some things China would actually be looking forward to.
Kayleigh, we're looking forward to your coverage later on Balance of Power. Of course, that is Kayleigh Lyons, co-anchor of Bloomberg Balance of Power down in Washington. Now, coming up, the market-moving events that you need to be watching. That's next in our Trading Diary. Stick with us. This is Bloomberg.
All right, let's get to the trading diary, what you need to be watching this week. And today we get earnings from Dell, Lululemon, and Ulta Beauty after the bell. Really interesting check on the state of the consumer there. We'll also hear from Atlanta Fed President Raphael Bostic this afternoon. Of course, Fed speak continuing to pour in here. And then tonight, the big interview. We're talking about Kamala Harris and Tim Walz sitting down for a joint interview on CNN. We'll keep an eye on that one, of course. And then we round out the week tomorrow with July's PCE inflation data, Shonali.
I'm going to check on these markets because what a day. You have the S&P higher, near session highs around 0.8%. NASDAQ 100 up more than 1.3%. And NVIDIA down 2.6%. NVIDIA not even the biggest loser, though, in that NASDAQ 100. You have Dollar Tree taking that spot. Fascinating. The NVIDIA story is actually the only down story in the Philadelphia Semiconductor Index today, Katie.
It's really remarkable. I mean, if you had told me this yesterday that NVIDIA would be disappointing, but still the broader market would be meaningfully higher right now, including the stocks, I wouldn't have believed you. But
session highs.
Here we are. All right, coming up tomorrow on Open Interest, we'll speak to Elias Sabo. He is the CEO of Compass Diversified. He joins us in the C-suite. We'll see you there. This is Bloomberg.
Is Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, NVIDIA pays the price of lofty expectations. CEO Jensen Huang tries to boost confidence in a Bloomberg exclusive.
Plus, the Telegram CEO is charged and out on bail in France over crimes committed on the app. We go live to Paris.
And California advances its controversial AI safety bill that has divided tech leaders. We discuss the law as it heads to the state Senate. That and so much more coming up. But first, we check in on the key name that we are all watching today. Nvidia, off by 2.8%. The $3 trillion company not living up to the hype in terms of its forecasts, and particularly Blackwell, which we'll dig into, Ed. But it's not dragging down the rest of the indices.
Market up, Nvidia down. I caught up with Nvidia CEO Jensen Huang after the results. He addressed concerns about the company's latest generation Blackwell chips.
We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3. And we're expecting Q1 to have more supply than Q4. And so I think our supply